one of the largest banks in Europe, Société Générale, launched Euro-pegged stablecoin on the XRP Ledger. This is one of the 4 major adoption anchors we are going to cover today. Welcome to the XRP Club, #1 channel for daily updates about everything XRP related. When you finish watching middle point of this video, you will realize why these adoption anchors are so important and how will they affect the price of XRP. Also, if you don't want to miss educational content and regular updates about Ripple and XRP, make sure to hit that subscribe button and turn notifications on. All right, let's get back to our first topic. Société Générale, through its digital asset arm, SG Forge, has expanded its Euro stablecoin, Eurocoinvertible, onto the XRP Ledger. This adds another major blockchain to its distribution strategy and gives the XRP ecosystem a new example of institutional activity tied to regulated finance rather than crypto speculation. The launch was announced by SG Forge in February 2026. It follows earlier deployments of EuroCV on Ethereum, Solana, and more recently, Stellar. That shows the bank is not treating any one chain as the single winner. Instead, it is building a multi-chain model designed to serve different operational and client needs. For beginners, the first thing to understand is what EuroCV actually is. It is a euro-backed stablecoin, which means each token is designed to track the value of €1 rather than move up and down like Bitcoin, XRP, or other volatile crypto assets. Stablecoins are useful because they combine blockchain speed with fiat-style price stability. That makes them easier to use for settlement, treasury operations, collateral management, and tokenized financial products. SG Forge describes EuroCV as a MiCA-compliant electronic money token, and the company says redemptions are handled at a 1-to-1 ratio in euro under the applicable framework. That matters because this is not just another loosely regulated crypto token presented as something more professional. It is a product issued by a major European banking group through a regulated digital asset subsidiary within a legal structure built for traditional finance. It is also important to separate this from a central bank digital currency. EuroCV is not a digital euro issued by the European Central Bank. It is a privately issued stablecoin from a commercial banking group, backed and managed under its own regulatory obligations. That distinction matters because retail viewers often hear the phrase digital euro and assume every euro token is state money. That is not the case here. So why place EuroCV on the XRP Ledger? The practical answer is that the XRPL offers fast settlement, low transaction costs, and a long operating history, which makes it appealing for institutions testing tokenized payments and on-chain settlement rails. SG Forge said the move fits its broader strategy of making regulated stablecoins available across several blockchains. And Ripple also highlighted that the launch uses Ripple custody as part of the setup. From the perspective of the XRP Ledger, this is meaningful because it increases the number of regulated fiat-linked assets available on the network and adds another recognizable financial institution to the list of participants experimenting with XRPL infrastructure. It also reinforces a pattern that has been developing across the industry, where banks are no longer ignoring public blockchain networks. Instead, they are using them selectively for narrow, controlled, and legally defined use cases. That is very different from the old narrative that banks would either reject blockchain completely or move everything on chain at once. The reality is landing somewhere in the middle. That makes this news credible, but also more nuanced than headlines that frame every bank move as immediately bullish. The market impact also needs to be framed carefully. This does not mean Société Générale is suddenly using XRP itself as a reserve asset, and it does not guarantee any direct increase in XRP price. A stablecoin launch on XRPL is better understood as infrastructure adoption rather than a simple price catalyst. It shows that established institutions see the network as usable for specific financial functions. But whether that translates into major XRP demand depends on how much activity ultimately flows through the ecosystem, what products are built around it, and whether those products require XRP in the process. The broader takeaway is that blockchain adoption inside banking is becoming more practical and more fragmented across multiple networks. Instead of asking which single chain will dominate everything, large institutions are increasingly asking which chains are best suited for different jobs. In that context, Société Générale's decision to add XRPL does not prove total victory for XRP, but it does place the ledger inside a more serious conversation about regulated digital finance, tokenized cash, and the future plumbing of cross-border and capital markets infrastructure. And speaking about capital markets, we are moving from Europe all the way to Australia and our second adoption anchor for today. Understanding these updates gives you the moving edge in the world of cryptocurrencies. If you agree, make sure to press that like button already. All right, moving to our second topic. Australia has now granted AUDC, Pty Ltd, an Australian financial services license. And that matters because AUDC is the issuer of AUDD, a stablecoin designed to maintain a one-to-one value with the Australian dollar. And that stablecoin is now available on XRP Ledger. On its official site, AUDC states that it holds AFSL number 700123, authorizing it to issue and deal in non-cash payment products, including AUDD, to both retail and wholesale clients. That means AUDD is no longer just another blockchain token looking for a role in payment. It now sits within Australia's existing financial services framework as a licensed product with defined legal obligations around issuance and operation. For beginners, the easiest way to understand this is to separate the technology from the legal wrapper. A stablecoin can exist on a blockchain, but what makes institutions take it more seriously is whether the issuer operates under clear rules with compliance systems, reporting standards, and legal accountability. That is where this license changes the story. AUDC is positioning AUDD as a regulated form of digital Australian dollars for payments and settlement, rather than as a speculative crypto asset. ASIC has also said it wants eligible stablecoins to be issued under an AFS license, which shows that this kind of supervised structure fits the direction Australia has been moving toward for responsible digital asset innovation. It is also important to clarify what AUDD is not. It is not a central bank digital currency issued by the Reserve Bank of Australia. The RBA explains that a CBDC would be a new digital form of money issued by the Reserve Bank itself, and it has not found a strong case for a retail CBDC so far. Reuters also reported that the RBA has been prioritizing wholesale CBDC work through Project Acacia, rather than launching a retail digital dollar style product. So AUDD should be understood as a privately issued stablecoin from a licensed company, not as official state money from the Australian Central Bank. Another important part of the story is that AUD is not limited to one blockchain. AUDC says the token is blockchain agnostic and currently available across several networks, including Stellar, XRP Ledger, Ethereum, Solana, Hedera, XDC, Base, and Redbelly. That matters because institutions do not all use the same infrastructure, and a multi-chain approach gives them more flexibility depending on settlement preferences, counterparties, and internal technology stacks. In simple terms, AUDC is trying to make AUD usable wherever institutional demand appears, instead of forcing every client into a single ecosystem. From the XRP Ledger angle, this is a constructive development, but it needs to be framed carefully. The XRP Ledger is one of the networks that supports AUDD, and its appeal is straightforward. It offers fast settlement, low transaction costs, and a payments-focused architecture that fits the basic use case of moving tokenized fiat efficiently. That does not mean the license forces banks to use XRPL, and it does not mean XRP itself suddenly becomes the direct beneficiary of every AUDD transaction. Institutions still need to decide whether to integrate AUDD at all, how to manage liquidity, how to handle counterparty and operational risk, and which blockchain network best suits a given workflow. The license reduces legal ambiguity around the issuer, but adoption still depends on commercial decisions and institutional comfort. That distinction is the key point for retail investors. The real significance here is ecosystem infrastructure, not immediate price impact. A licensed Australian dollar stablecoin being available on XRPL expands the range of regulated financial assets that can operate on that network. It strengthens the case that public blockchains can be used for compliant payment rails and tokenized value transfer within mainstream finance. but it does not automatically create a wave of XRP buying, and it does not guarantee that Australian banks will move in immediately. What it does show is that stablecoins are moving deeper into regulated financial systems, and that policymakers and market participants are trying to fit them into existing supervisory structures rather than leaving them in a legal gray area. In that sense, the bigger story is not about one token alone. It is about how blockchain-based settlement networks, including XRPL, are gradually becoming part of the infrastructure conversation for modern finance, one regulated product at a time. And speaking about regulated products, we are getting back to Europe, and we are going to dive inside one of the biggest regulatory authorization steps any crypto asset managed to acquire. Before we move on, comment below if these simple graphics help you follow and understand the video. If they do, just comment, "We love you, Mark," because Mark is the designer behind these. All right, enough chit chat, diving inside our third topic. Ripple has recently strengthened its regulatory position in Europe, and that matters because the company is trying to expand its cross-border payments business in markets where financial institutions usually want clear legal approval before adopting new infrastructure. In the United Kingdom, Ripple announced on January 9th, 2026, that it had secured both an electronic money institution license and crypto asset registration from the Financial Conduct Authority. The FCA register also shows Ripple Markets UK Limited as a firm permitted to issue electronic money and provide payment services. Around the same time, Ripple also advanced its position in the European Union through Luxembourg. On January 14th, 2026, the company said it had received preliminary approval for an EMI license from Luxembourg's financial regulator, the CSSF. Then, on February 2nd, 2026, Ripple said full approval had been granted, giving Ripple Payments Europe SA an authorized EMI footing in Luxembourg. Ripple's own compliance page states that Ripple Payments Europe SA is regulated by the CSSF under registration number W21. The main point is simple. These are not just symbolic awards or public relations headlines. EMI licenses are part of the legal framework that allows a company to issue electronic money and provide regulated payment services, while crypto asset registration in the UK adds another layer of supervised compliance tied to anti-money laundering requirements. That kind of legal clarity matters because banks, payment providers, and large companies rarely use blockchain-based financial infrastructure at scale unless they can do so within a recognized compliance framework. The UK FCA explains that firms wanting to issue electronic money or provide payment services must be authorized or registered, which is exactly why this approval matters for Ripple's business expansion. Cassie Craddock, Ripple's managing director for the UK and Europe, described the approvals as an important step for regulated digital asset infrastructure. In Ripple's UK announcement, she said the approvals would enable Ripple to provide essential digital asset infrastructure to UK businesses. In Ripple's EU announcement, she said the full EMI license in the EU was a transformative milestone that would help scale compliant blockchain infrastructure to clients across the bloc. In a later public post, she also said that Ripple's UK FCA approvals, together with its EU EMI license, mean the bridge between traditional finance and decentralized finance is officially open. That phrasing sounds dramatic, but the underlying meaning is practical. Ripple is trying to make itself easier for regulated institutions to work with. Its payments business is built around moving money across borders faster and with less friction than traditional correspondent banking, which can involve multiple intermediaries, higher costs, and slower settlement. Ripple's payments materials describe real-time cross-border payments designed for institutions, and the company has repeatedly positioned this as a way to reduce operational friction in international transfers. In some cases, institutions on Ripple's network can also use on-demand liquidity, which uses XRP as a bridge asset for settlement between currencies without requiring the same level of pre-funded capital in destination markets. That does not mean every licensed Ripple service in Europe will automatically use XRP, but it does mean the regulatory approvals can support a broader set of compliant payment and digital asset services that may include XRP-linked settlement where appropriate. That distinction is important for retail investors because these licenses are best understood as business infrastructure rather than an instant demand switch for XRP itself. The larger takeaway is that Ripple now has firmer regulatory footing in two major European financial zones, the United Kingdom and the European Union. That improves its ability to approach banks, fintech firms, and payment companies that want blockchain-based payment technology without stepping outside established legal frameworks. It does not guarantee that adoption will surge overnight, and it does not prove that every institution in Europe is suddenly ready to move large parts of its payment stack onto blockchain rails. But it does remove a major barrier, because regulatory uncertainty has long been one of the main reasons traditional financial players move slowly. In practical terms, these approvals give Ripple a stronger base from which to pursue partnerships, scale payment services, and present itself not as a startup asking for trust, but as a licensed provider operating under rules that Europe's financial sector already understands. All right, we saved best for last. We talked about European stablecoins, Australian stablecoins, but now it is time to explore Ripple's own stablecoin, better known as RLUSD. Because major fintech platform just added new utility to RLUSD. Soil, a fintech platform operated by Orco Group, has expanded onto the XRP Ledger. The significance is not that it creates an immediate price story for XRP, but that it adds another layer of regulated style financial infrastructure to the network. The launch was announced on February 19, 2026, with Orco saying that Soil had become what it described as the first compliant real-world asset-backed yield protocol on XRPL, built to unlock utility for Ripple's RLUSD stablecoin. According to the announcement, users filled $1 million in initial asset pools in under 72 hours, with additional pools expected afterward. For beginners, the simplest way to understand Soil is that it is designed to give stablecoin holders a way to earn fixed returns through on-chain vaults, while the underlying yield is tied to more traditional financial strategies rather than pure crypto speculation. Orco says RLUSD holders can deposit into yield vaults that generate returns from lower volatility instruments such as private credit, tokenized treasuries, and market-neutral hedge funds. That is a different model from older crypto yield products, which often depended on aggressive token incentives, leverage, or unsustainable lending loops. Here, the pitch is that yield comes from real-world or traditionally structured assets and is then delivered through blockchain rails. The company also says this XRPL launch is not its first attempt at the model. In the same release, Orco said Soil was building on a 3-year track record across major Ethereum virtual machine networks, including Ethereum, Polygon, BNB Chain, and Arbitrum. That matters because one of the main questions around any new protocol is whether it is an untested concept or an extension of something already operating elsewhere. In this case, Orco is presenting the XRPL version as an expansion of an existing strategy, not a new experiment created for headlines. Orco also makes broader credibility claims about its institutional profile. Its press materials say the group has around $300 million in assets under management, holds licenses in Poland through the KNF and in Malta through the MFSA, and is establishing global headquarters in Abu Dhabi. These details come from Orco's own published materials, so they should be treated as company-stated claims rather than independently audited conclusions. Even so, they help explain how the firm wants to position itself as a bridge between traditional finance, regulated credit products, and tokenized capital markets. The choice of XRPL also fits that positioning. Orco said it selected the XRP Ledger for its compliance-ready and scalable environment, citing near instant finality and very low transaction fees. That matters because if a platform is targeting institutional-style capital flows, speed, cost efficiency, and operational simplicity become more important than the speculative narratives that often dominate crypto headlines. Earlier in February, Orco also announced a single asset vault on XRPL tied to institutional lending workflows, which suggests this move was part of a broader build-out on the network rather than a one-off marketing event. From the stablecoin side, this launch also reflects a broader market trend. Deloitte Luxembourg recently wrote that the stablecoin market is projected to reach $2 trillion by 2028, while noting that growth depends on regulation, institutional adoption, and infrastructure development. That forecast is not a guarantee, and different analysts use different models, but it helps explain why projects like Soil are appearing now. Stablecoins are increasingly being treated not just as exchange parking tools, but as programmable cash layers that can support payments, settlement, and yield-bearing financial products. The main takeaway is that this is an infrastructure story. It gives RLUSD more utility inside the XRP Ledger ecosystem and signals that builders are trying to attach regulated style financial products to Ripple's stablecoin and XRPL rails. It does not guarantee mass adoption, and it does not prove that XRP itself will see immediate, direct demand from this launch. But it does show the network evolving beyond simple transfer use cases and moving further into tokenized finance, yield products, and institution-focused applications. In practical terms, Soil's expansion onto XRPL is another sign that the ledger is being positioned not only as a payments network, but as a platform where compliant financial tools can be built around stablecoins, real-world assets, and on-chain capital markets. And with that, we finished today's video. But let me explain one more thing. You must be asking yourself, if all of this is so great, why is XRP price not reflecting such bullish news? And it is a completely logical question, but it is important to understand that the crypto market has become much larger, and price action now tends to follow broader market narratives. Updates like these usually do not move price on their own. What they can do is strengthen the foundation for a larger move if market sentiment shifts, because they bring more attention, more credibility, and more recognition to Ripple and its main product, which remains XRP. Many crypto YouTubers make bold price predictions, especially in their thumbnail, but those predictions are rarely reliable. The best advice I can give is to keep learning and keep informing yourself. That is one of the few real ways to build an edge in crypto. Speaking about that, check one of the 2 videos on your screen now. Alongside XRP updates, I also make educational videos about XRP that can help you understand it at a much deeper level. Leave a like, share your thoughts in the comments, subscribe, and I will see you in the next video.